When Wheaton put out their third quarter results, we thought that they were pretty good. The market didn't think so. And since then, the stock went from $90 to $106, and we feel somewhat vindicated. But after these fourth quarter results just came out, stock's hitting all-time highs. Chart looks amazing. Guys, we're talking Wheaton, we're talking Q4 earnings. Let's dive in.
Wheaton, in the fourth quarter of 2024, reported record top-line revenue of $381 million, which represents a 21% increase on a year-over-year basis from the $314 million in revenue recorded in the fourth quarter of 2023, which was off the back of the average realized gold equivalent price jumping 32% to $2,677 an ounce, and the sale of 143,000 gold equivalent ounces. Net earnings for the quarter totaled out at $88 million, or 19 cents per share, which, despite the record revenue figure, was a 48% decline on a year-over-year basis, down from $168 million, or 37 cents per share last year. The large decline was a result of an impairment on the Voisey's Bay stream to the tune of $109 million, which was a result of a significant and sustained decline in the cobalt market. Wheaton had previously paid $390 million for a stream of 42.4% cobalt production from the mine, the value of which has been reduced to $231 million following a reassessment on the asset by management. On an adjusted basis, Wheaton saw record net earnings of $199 million, or 44 cents per share, which was a 21% improvement from the $165 million, or 36 cents per share, recorded in the fourth quarter of 2023. Operating cash flow also hit a new record high for the quarter, improving 32% year-over-year, moving from $242 million to $320 million in the fourth quarter. For the full fiscal year, revenue improved from $1 billion to a record $1.3 billion, which was a 26% improvement, which is said to have been primarily due to a 20% increase in the average realized gold equivalent price to $23.93 an ounce. Gold equivalent ounces sold, meanwhile, totaled 532,000 ounces. Net earnings, however, declined by 2% year-over-year, falling from $538 million, or $1.19 per share, to $529 million, or $1.17 per share, which again was a result of that impairment charge on the Voisey's Bay stream. On an adjusted basis, net earnings hit a record $640 million, or $1.41 per share, a 20% improvement over the $533 million, or $1.18 per share, recorded in 2023. Operating cash flows also hit a record high, crossing the billion-dollar mark to come in at $1 billion, a 37% improvement year-over-year. Wheaton finished the year with $929 million in cash on hand after making upfront cash payments of $115 million to certain mineral stream interests during the quarter. The company also has zero debt on its books and an undrawn $2 billion revolving credit facility, which is after paying out record annual dividends of 62 cents per common share. All right, let's look at the production data. The fourth quarter saw Wheaton Precious Metals collecting on royalties and streams from 18 operating mines, while a total of 28 such agreements are in place on development projects, two of which, Koné and Kurmuk, were added in the fourth quarter. Attributable gold equivalent production hit 187,500 ounces in the fourth quarter, which was a 14% increase from the 165,000 GEOs produced in Q4 of 2023. The growth came from the Salobo and Peñasquito assets, with gold production notably hitting a record high during the quarter at 118,000 ounces, a 4% increase year-over-year. Broken out, silver production hit 5.7 million total ounces, palladium hit 2,800 ounces, and cobalt pounds hit 393,000, in addition to the aforementioned gold ounces. Cash costs per gold equivalent ounce produced totaled $441 in the fourth quarter, an increase of $4 on a year-over-year basis, leading to cash operating margins of $22.28 per GEO, which was a 41% increase versus Q4 of 2023. For the full fiscal year, a total of 635,000 gold equivalent ounces were produced, which was a 9% increase year-over-year, and a beat on guidance that had called for 550,000 to 620,000 gold equivalent ounces. Broken out, gold ounces produced hit 380,000, which beat the guided range of 325,000 to 370,000 ounces, while silver production came in at 21 million ounces, also beating guidance, which had called for 18.5 to 20.5 million ounces of production. Palladium ounces, meanwhile, came in at 15.6 thousand ounces, while cobalt pounds produced totaled 673,000. Cash costs for the full year, meanwhile, came in at $436 per GEO, a decline from the $451 per GEO figure in 2023. Cash operating margins, meanwhile, improved 27% to $19.77 per GEO on a full year basis. Lastly, Wheaton indicated it has 164,000 gold equivalent ounces that were produced but not yet delivered as of year-end, which represents 3 months or a full quarter's worth of production, which was again attributed to the production increase at Peñasquito and Salobo. So what can investors expect for 2025? Well, to start, construction activities have advanced at a number of development stage assets, with initial production from the Blackwater, Goose, Platte Reef, and Mineral Park projects expected in 2025. Production has been guided to be between 600 to 670,000 GEOs, which represents effectively flat production year over year, after 2024 saw its production guidance beat. That being said, Wheaton basically expects about 10% growth year over year on a guidance midpoint basis. While Peñasquito and Constancia are expected to have lower production this year, it will be offset by improvements at Antamina and the startup of those previously mentioned development projects. Long term, Wheaton is forecasting that production will hit 870,000 GEOs by 2029 due to a number of its development projects coming online over the next several years. Even further out, the company anticipates production in excess of 950,000 from 2030 through to 2034, which doesn't include production estimates from 9 current assets that may add to figures further.
So let's wrap it up. Wheaton is hitting record revenue, record cash flow, record dividend payments. Also, all-time highs in the share price. Tremendous growth profile. I'm not sure what's not to like here. Guys, this wraps up my earnings coverage here while I'm on vacation. I'm going to take the next couple of days to spend with family. We will be back next week. I'll be back in studio. So thanks for watching. If you haven't already, hit that like button, subscribe, ring that notification bell. Thanks for watching, everyone.